What is up, Shark Nation? Welcome to another episode of the SharkPod live from Greystone Studios. We've got Marky B out there in Glenageary as usual. Mark, how are you getting on?
Very good, Luke. How are you?
Good, good. We've got the $1 Million Irishman on the line as well. Chris McGale, how are you doing?
Yes, I'm very good. Thank you, Luke and Mark. It's a pleasure to join you guys.
We were looking forward to this one. So Chris McGale, your book came out this week, I believe. The $1 Million Irishman. It's out today, was it, or what was the official?
Yesterday, yesterday. So it was on. It's on Amazon. It's on Eason's. It's Bookstation, and also with Kenny's. And the Audible book came out yesterday also. So perfect.
Yeah, I had a listen to that today, Chris. Very good. The Audible one, really, really good.
Well, actually, Mark, I'm very pleased to do a couple of things. First of all, a little plug. Here's the book, right? This is the paperback. On the side is a section here which says, "I'm Chris McGale." Turn it around. WTFRU, which stands for "Who the fuck are you?" Which comes from my sort of attitude thing when I was in the city as what they call the big swinging dicks. And, I was generating $28 million a year as an Irishman from Omaha, born above a pub. I'd come from absolutely nowhere, working with these guys who were, big city guys who went to the right schools. I didn't, all those things. But having said that, I went to Queen's in Belfast, and I had my big break getting into working with Ulster Investment Bank in Dublin. The other thing I wanted to show before you guys get going is a fabulous list of really great books, which includes at the top the $1 Million Irishman, but it also includes Matthew McConaughey and Darren Brown, and that is Mark Baker's Audible list. So
I sent him a screen grab earlier on.
Well.
Nice. Well, I thought you were reading Matthew McConaughey. I'm like, listen, Chris, we're big fans of Matthew on the podcast as well. So, he interacted with some of our social media before. Me and Mark are like, this, it's going to happen. We're getting McConaughey on, but it hasn't happened yet. He's very welcome anytime he wants to come on the SharkPod for sure. So, like we were saying, the book follows your life from starting off in Omaha during a turbulent time, let's say, in Omaha, and then the kind of trials and tribulations as you kind of rise through the financial, the city business in London, working for one of the biggest investment banks, doing very well there. It goes on to about gambling, it goes on to spread betting, all those really interesting stuff. But when you got started in or when you were born in Omaha, what was that like for you? What was the kind of situation you were born into? Was it was your parents around? What's the story there?
So bad timing. I mean, the story is essentially from John Street to Wall Street, and John Street is where I was born in Omaha, literally born upstairs above a pub. And so I spent my whole life around money and people and dealing with people and relationships, selling raffle tickets as a 10-year-old and carrying the bets from the boogie to the boogies, from the pub, from the punters. And so I was literally gambling in pennies when I was pre-teenage, age 12 years old, getting the excess from the guys on any winnings and then putting that on something. And so I went from betting on pennies to pounds to hundreds to thousands to hundreds of thousands, and then ultimately millions at Merrill Lynch. But I myself had become almost a professional gambler while I was working in the city as well. So I'd be betting on 5, 10, 20 grand on things pretty regularly on a weekly basis, such that an old friend back in Omaha said, "You're betting more in a week than the price of a small house in Omaha." So it was quite a statement at the time, made me laugh. So it's been a great life, great journey. I mean, I've had everything I could ever have wished for in life, and I hope me talking to you, inverted commas, young guys, I'm 58. I had my first vaccine today, that's the age I am, I'm really pleased to be on the call because I think I like to use the word inspirational. I mean, the book and its predecessor, which is called The Humpty Dumpty Man, which is to do with my near-death car crash. The word most used to describe that in this, which is more or less 100 reviews on Amazon between The Humpty Dumpty Man and The $1 Million Irishman. The word most used is inspirational. So I do hope in this chat to inspire some people to say you can do it. And it's always a pleasure to talk to young people and feel the energy and the opportunity. The opportunity is there.
It's amazing to think that. So inspiring people, like we talk about, I know you mentioned us as the young people. We always think about people when they're leaving school, going to college, leaving college, kind of at the beginning of their career as well. And it's something that if you can have an inspiring life, that's always a good end goal to have. But along the way, when you were in Omaha, was I mentioned, you were running around doing things for bookies, and there was a lot of stuff going on politically at the time. I guess that was the 1970s in Northern Ireland. So were you ever kind of aspiring to be kind of a big shot, a banker in the city? Was that anyone around you that said, Chris, that's what you should be doing with your...
It's a great question. The three things I should have said about Owen. Number one, we were orphan kids, so I never knew my dad. He died when I was 3, so I just become 3. My brother, who was then 4 going 5, and then our mother died. We were 7 kids, but in the book I referenced my relationship with my brother Paul. So our mother died when I was 12. He was 13 going 14. And then he was sort of kicked out of the Christian Brothers 4 months later after they gave him a really bad beating. So we grew up with this sort of feral life with the troubles going on. As one guy said, Chris McGale was running from the UDR when I was running for a bus. It was like I was never involved in anything, but the world was crazy. It was all around you, guns and bombs and killings, and it was just a crazy world, which I was very happy not to be a participant of, but everybody was a victim of that. So we had the sort of victimhood of being orphan kids and being around a pub, and then my brother hit the booze and became a chronic alcoholic. I was a feral gambler. I spent my days in the bookies. So while I was sort of allowed in there because I was the bookies runner, I could hang around there all day, and I did. And so I went from betting on horses, which I was very good at, to playing poker. So my life at sort of 15, 16 was poker and horses and money and hustling people on a pool table, and hanging out in Bundoran in the summer based on money we made, hustling people. So I had no ambition to be anything like a stockbroker or anything like that. I went back to school at 18 with no qualifications. My brother was kicked out, expelled, had his inverted commas scholarship terminated by the Christian Brothers. I left too. There was nobody at home to say, "Oh, don't do that, son." And we just left and bummed around for many years. And I went back to school at 18 and had no ambition whatsoever other than to get some accountancy or something to help me run the family business, which I'd now become head of. Everybody else had sort of stepped aside over the years, 2 elder sisters and both my brothers, and it came to me. So that was my ambition, just to learn accountancy and a bit of business, a bit of law, whatever, in this sort of BTEC course. And then suddenly I found myself at Queen's, and then suddenly I found myself doing advanced statistics and econometrics and things like that. I'm going, bloody hell, what's this? How it's like that song, Talking Heads. My God, how did I get here? It's like, And then suddenly I find myself in Deloitte, and then suddenly it's Ulster Investment Bank. And the way I got into Ulster Investment Bank is I was punting shares in all the UK IPO, all the privatizations. So you guys won't remember, but British Gas and British Telecom, all these nationalized industries were being reprivatized. And, I was punting them and had a whole lot of guys buying shares for me, and, I was stagging these things and selling them on the open. It was like a lot of fun. So I'd moved from horses to poker to stocks and shares without really thinking about it. And so before I knew it, I'm trading shares instead of betting on, as well as betting on horses and playing poker. So it was quite a journey.
Because I know that they don't like to talk about that as if it's gambling, but it is that there's a lot of speculation that goes on with these investment banks and stuff like that. And I think I've got a little bit of experience in that because I worked for Davies for 2 years out of university as well. And I think so we used to all sit around. We were in our early 20s, and we used to, we'd go to the Duke pub. That is kind of like the Davy pub on Duke Street. Yeah. And we'd sit around. And I always felt like we kind of missed the boat a little bit with the kind of the stockbroking game. Everyone they didn't, when we got in there, we thought we were going to be making trades, kind of, helping with with wealthy people making decisions, stuff like that. And most of the younger people that came in were just doing kind of admin stuff. Like everybody, they weren't allowing us to do anything, and we were like, "What's going on?" I thought this was going to be Wall Street, but it just felt like a bank.
Yeah, there's a lot of truth in that, and I fully understand that. I mean, I was just very, very lucky, and in so many ways, I was lucky to get into Queens, out of Omaha Tech. I hadn't gone back to school and I did a crash course in O levels and then a B Tech course, and I got a distinction. But nonetheless, they just relaxed the rules to give such people a try. So I got into Queens, I got into Deloitte, got into Ulster Bank Investment Bank in Dublin. So I was in Dublin, and it was great. The very early days of the Dublin investment community. So you were just behind that, unfortunately. I'm guessing you were 10 years behind that. It was 87, something like that. I don't know when you were there, but
2012-ish. So
I'm way back. So anyway, the message, I know you're only a kid, sorry, my apology, I'm 58. Then to think of myself as so I was sort of there at the right time. Bank of Ireland were growing assets under management hugely at that time. So the banks all managed semi-state firms like RTE and Telecom Ireland and things like that at the time. And they'd be shared around AIB Investment Managers, Bank of Ireland Asset Management, Ulster Bank Investment Management, and each of them had a slice each. It was more focused on what they call business risk, that you didn't underperform your competitor rather than try to outperform. But stock markets were growing after the 87 crash. Black Monday 87 was more or less when I started. I started a month before that, 6 weeks before that. So then for the period of time after that, right through to 2001, where I was there, the markets went up. The markets went down, I take it back, March 2000. So, it was sort of 13, 14 years of upside in the markets. And so we were there just at the right time, having been an asset manager in Dublin. So by the time I was in 1991, which would have made me about 28, I was running 100 million for Ulster Bank in Dublin in UK equities. So it was like an amazing moment of time, but somebody was in that seat, me, and after that, it's sort of to go back to your point, look, it's dead man's shoes, to get the opportunity, it's hard because somebody's got that opportunity, and, you don't need two people, you don't need two people to run 100 million, taking 50 million each. One guy runs it, and that's it, So I just happen to be in the right place, the right time. I fully get that it's harder, but it wouldn't put people off. I think there's always an opportunity to get into the market. And I tell people all the time, there's also people come to me and I say, look, there's no better industry to be in. People are getting older. The world's getting richer. It needs to be serviced from people who are smart, street smart, ambitious. And it's an industry that's going to grow and grow for a long, long time. So there aren't many of those around. Technology, where else? But financial services is a great place to be.
And so, just for the people that don't have that much experience in finance and stuff like that, when you're talking about working for Ulster Investment Bank and managing funds, are they like funds of institutions, like pension funds that you're trying to get a return on over a year? Are they like wealthy individuals that you're kind of trading on behalf of? What's the role there?
Well, Davy private clients and Goodbody private clients would be handling most of, and other such entities, Marion, will be handling the funds for the high net worth private clients. Back in the day, as I began to say earlier, I didn't finish the point really, was Bank of Ireland Asset Management, AIB Investment Management, and Ulster Bank Investment Management were running largely semi-state pension funds. But then the performance was quite good, and especially Bank of Ireland started raising money from the US. So you had these huge investment funds, investing funds in Europe through Bank of Ireland in Dublin. So assets under management for BAM, as you will remember them being called, went from 3 billion Irish pounds to 50 billion over a period of about 7 or 8 years, and it was huge. I mean, a guy called Chris Riley, hello Chris, if you're watching, who was an absolutely brilliant asset manager, a guy with real proper balls, and had strong views and really, really nailed the market for many, many years. So Chris Riley was instrumental in the growth of the Dublin investment community. Unfortunately, they sort of stayed away from the dot-com thing. Because it was aircom, telecom air, and they ended up with a lot of aircom, which wasn't a good place to be. And things like Baltimore Technologies, which you may or may not have read about in my book, came and didn't help either. So for a period of sort of the dot-com bubble, when it went bust, while they weren't really in it, they had telecom related things that didn't help. And then when they came out of that, they started to lose the funds under management from 50 billion down, and eventually, they're not in that scale anymore, put it that way.
Wow. And so you started working in the investment bank, started doing well there. At what stage do you go to London? Does somebody give you a call and say you've kind of made the grade, or is it something that you say all these London guys are making bigger money, this is where the money is, will I go over there? What's the kind of driver to go over to see we can win over there?
In my case, it was need, actually, and again, I had no plan. So again, I was just very, very lucky. I saw the opportunity in the end, but it was still need. So I was in a court case over the near-death car crash that I had, which I lost. So they offered me 90,000 in 1991, which is equivalent to about 300,000 today. I declined it, and I lost the case and got zero. So I went to London with the tail between my legs, really. I had met a guy who was working for a firm called Smith Newcourt, and he was going to soon to become the chief executive of that. And he was in Dublin, wondering why his firm weren't doing any business in Ireland. And this was a Jewish stock jobbing firm. They'd come from a group called Smith Brothers, and the Newcourt is a name given through a connection with Rothschilds. Anything called Newcourt gives you a connection with Rothschilds, which in turn I joined because I lost a court case. And then in time they were acquired, that was 91, they were acquired in 1995 by Merrill Lynch. And I sort of landed on my feet, working for the biggest Irish investment bank in the world, who happened to be the biggest investment bank in the world, as well as being the biggest Irish investment bank. And so, I was just the guy from Omaha running around with the great and the good of Merrill Lynch, which was heavenly, absolutely heavenly.
But when you got to London and you got your first kind of position there, how was that like? Because because I've met some of these guys over the years, especially when I was in the kind of Davy stuff, and it's kind of the Eton guys, the kind of tough guys in there. Was that your experience, or was there from a trading point of view and that type of thing, or was there kind of a more of a gritty type of personality in the trading room? Who's in there?
Well, it's a good question again. In fact, Smith Newcourt, as I said, was a jobbing firm. So back in the day, on the floor of the stock exchange, before electronic screens, there were literally guys, doing this tic-tac stuff, and they were in the pit, and people were shouting orders and bits of paper floating around you, as it is today on the New York Stock Exchange. But you'll see that, you guys will know, but just for other people listening, that's actually real. I mean, the trades go on there, but most of the trade are done on screens off-site, but they keep that there for, in order to keep, the launches for ring the bell for big new firms and so on. And it is real, it is functioning there on the floor of the New York Stock Exchange, but it doesn't apply in London anymore. So Smith Brothers, before they were Smith Newcourt, were literally a bunch of Jews together, making prices in gold and mining stocks and stuff like that. When Rothschilds came along to become Smith Newcourt, they became, after Big Bang, which was 87 also when I joined, 86, 87. So when screens moved when trading moved online, they became Smith Newcourt and set up a stockbroking business. So I joined that part of the business, separate from the trading part. So the trading guys were just fabulous. They really knew the price of everything, and they were prepared to take risks and so on and so on. So I absolutely loved it there. I landed on my feet, a guy who knew the price of things as well. Working with these guys, it was heaven. And Chris Riley, just basically made me then. He started sending orders my way, and then the guys I used to work with at Ulster Bank and AIB as well, and Irish Life. So I had sort of 4 or 5 accounts really feeding me, and it was heaven. So then Merrill Lynch took over, and then it all changed, because Merrill Lynch, whilst they were different in New York, everybody they employed in London and Europe was Oxbridge and Eton. It was a very different world. So we had built this great business, Smith Newcourt, and grown revenue sharply, such that Merrill Lynch paid $750 million for us. It was a lot of money back in 1995. And so we were a really good business, but Merrill made the business much better, of course. I mean, for me, it was heaven, you know, I had the whole investment bank suite of services, but it was a very different type of person. You know, I had, you know, the big swinging dig, tall, I'm 5'6", you know, with what I like to refer to as a funny accent, you know, working with these guys. And then that's why I coined that term, I'm Chris McGale, who the fuck are you? Because it was my sort of defense mechanism. So that's where that comes from. So I found it more difficult in time as I progressed up the ranks in Merrill. You know, whilst I did get right to the top, you know, I was a managing director and country manager for Ireland, and there weren't that many country managers altogether, and I don't know, 10 in the whole firm. And in terms of managing director, that was the top 5% of the firm, and you were making $1 million a year, and you know, it's crazy numbers and a great life in its own way.
So $1 million a year is this kind of early 90s? Would we
late 1990s?
Late 1990s. So
before the millennium, yeah.
Yeah, I remember in the book you were saying that at one stage you're making more money than the footballers in Arsenal.
Yeah, we're earning more than the Arsenal. Was a great line. I absolutely loved working for Smith Newport in its own way. I love working for Merrill Lynch as well. But yeah, we're earning more than the Arsenal, yeah. And you know, we started off. I was on, I don't know, 60,000, 40,000 plus a car on day one. And my net take-home pay sort of trebled from Dublin because taxes were high in Dublin and the conversion exchange rate was better. And so within sort of 3 years, I was making 300,000 a year, and you know, it just went crazy. Every year, you know, 50 grand bonus. You know, you get your first 50 grand bonus. You go, wow, what's this? You know, it's like.
How old are you when you're getting these 50 grand bonuses?
Well, I was sort of a late starter in the sense I didn't go back to school till I was 18. So I went to Dublin in 87. So I was about 25. I had the crash then. So by the time I went to London, I was probably 28. So by the time I was making that money, I was actually in my early 30s. So I was a late starter. I wasn't that young. Yeah.
Late start. I'm sure there's a lot of people in their early 30s that love a few bonuses like that. But the thing, me and Mark were trying to think about this as well. I like in the book the way you describe how the business works, and it seems like it's simple enough. As in, you do the trade. There's a commission on the trade of 0.2%. And then that goes towards your P&L. When they kind of explain that to you, because me and Mark Rose, we said like that seems like a job that'd be great, just if you could have unlimited upside and you can just get after it. But are you like, do you just have a book of clients and you're calling them with with today's picks, or how does that actually work?
Well, that's a good question again. I mean, so I had 5 accounts in Ireland paying me more than $2 million. The fifth, aside from the 4 that I mentioned, Ulster became KBC, Irish Life, AIB, and Bank of Ireland. So then Pioneer set up in Dublin, and they were huge. They were Italian at the time. They'd been acquired by Pioneers, an American firm in the meantime. So basically, I had those 5 accounts, let me say, and so in my pot of business, you know, whatever commissions came from those 5 accounts went to me. But really, I was making, $28 million a year from those 5 accounts. You know, it's colossal. I mean, if you take the numbers at 0.2, which is a fifth of 1%, it adds up to 1.4 billion of trades.
Wow.
You know,
and are you calling those trades? You're saying this is what we're going to do?
No. I mean, the flows of money are coming in. So Bank of Ireland, for example, just because I keep using them as they were the best guys in town, without doubt. They acquired New Ireland Assurance, and New Ireland had a portfolio of about, I think it was nearly 500 stocks. Bank of Ireland consolidated that into less than 100. So they did what is called a transition trade, which I handled, which was great. It was €1 billion at the time. You know, early. I think it was euros, £1 billion or €1 billion. Late 1990s, I'd say. So it was still probably pounds, but it was $1 billion anyway, and it's in the book. And basically, so they may have had, within that less than 100 stocks, call it 95. They may have had 35 UK positions. So I'd be concentrating on those 35 names. And if anything happened in any of those names, I was straight on to Bank of Ireland. Similarly, I would know the portfolio, UK portfolio. I didn't do pan-European. I was just too busy doing what I did. Pan-European is the norm now rather than UK only. But back then, I would have known the portfolio of every one of those 5 accounts in UK shares. So whatever's happening that may have added up to maybe 60 or 70 names. I'd be watching them all the time, and whoever needed the first call got the first call, not who was the biggest.
Okay.
And so that's it. You're sort of constantly in a dynamic process. Some news has come out. The news can be good, it can be bad, or it can be indifferent. It may be in the price already. The price may have gone down, and suddenly there's some bad news, and actually that's the time to buy. Price may have gone up. There's some bad news. Well, don't worry about it. It's what do they spend that money on? It's all gone into investment. It'll be better numbers next year. So you're constantly making judgments on news. And I think that's where I was good, because first of all, I have a brain that can contain and consume all this information. Just as I did in betting on horses, I knew everything there was to know. Nobody knew more about horses than me. Nobody knew more about my stocks than me. This is a sort of psychology, which is I'm Chris McGale. You had to believe all that stuff, and you had to go for it all the time. It's like I described it in the book as like an ongoing game of poker. It never ends.
And so when you're 1.8 billion of trades going through your accounts.
1.4, yeah.
1.4. But who's counting? It's still a lot of money. So 1.4 billion going through. Are you stressed out to bits the whole time? Are you, how are you feeling about that all the time? Is there,
lots of guys did coke. Just to answer your question, lots of guys did coke, by the way. I never touched it in my life. I had enough trouble with booze. You go to the pub after work. But I joke about that. Look, here's what it is. It's a life that I'm sure professional footballers, strikers in teams, they have to score. I describe in the book, I was a star striker for the team. We had all these analysts giving me the information. They were relying on me to score the goals, right? So I'd be brought on side a deal, and everyone would sit around saying, "What do you think, Chris? Can you make this happen, Chris?" And I'd say, "Yeah, I think I can make it happen," and just go and do it. Or no, I'm sorry, this is the wrong price, or the wrong story, or we shouldn't go with this, or whatever it might be. So you had a lot of decision making to do, but I described often to myself, I was happiest when I was really flat out, when I hadn't got time to think about any individual situation. So, if I'm dealing in 4 or 5 different situations all at the same time. Back in the beginning, we actually did the trades as well. So we had dealing sheets with duplicates on it, blue on top, yellow in the middle, and pink on the bottom. One went one place, the other went the other, and you actually did the trades. So the guys be on the phone, you'd be saying, "Yeah, I bought 100,000 for you," and somebody else be on the phone. And I used to joke at the time, I wouldn't pick up the phone for less than £1 million, which was to paraphrase Linda Evangelista. And I just hadn't got time. Some guy called, and that's, I can't take that call. I'm sorry, I'm too busy. So then the time we moved on from the dealing, went to dealers and what they call sales traders, who sat in the middle between salesmen, sales traders, and dealers. So the sales trading function became very important, and then the dealing function was removed from people like me. So that made it a lot easier, and you could manage it. There's only so many hours in the day. You just took as many calls, did as much as you could, and that was all you did. But you were flat out all the time.
And are you thinking to yourself? So you guys can hear me?
Yeah, I can hear you.
Yeah, cool. Sorry, I thought I was breaking up there. So I worked in a real sales environment. Well, I always worked in sales environments, but I remember working in one particular place in Canada when I was living there, and it was very much like if you made a sale, you got $1,800, and I just remember every time you did this, like I couldn't believe that they were going to give me another 1,800. It didn't matter how, like there was no end to how much I could make of that. I'm calling people all over Alberta, I couldn't believe that they would give me these lists of leads to call. True, because I'd come from working in Davie where it was all very structured. But my point is, were you thinking in your head, like every time you made a trade, it's all adding up in your head to say at the end of the month, this is how much I'm going to get? Is that why you're not taking that call unless it's $1 million?
From 1991 through to 2000, almost all the time, my P&L went up every single month. It's because all the money assets were growing in Dublin. So there was more and more money coming through. So very often it was just putting more money into the same stocks. You weren't given a new idea every day. Yeah. If you were, Vodafone is a great example. I was around in Dublin when we were investing in Vodafone, when they made military radios, and they were called Regal Telecom. So by the time I came to London, they just changed the name to Vodafone, and I was friendly with the chief executive and all these guys because we were investing in a small company called Regal Telecom, and they came out of another small company called Regal Electronic. So I actually was there when I learned why they named Vodafone, which stands for voice and data, Vodafone. So anyway, so we knew everything there was to know about Vodafone because we were on first name terms with the bosses. So if anybody needed to know anything about Vodafone, you got the call. Yeah, I'll have a word. And this is before they were the biggest company in the world. And then we defended management in what was the biggest ever corporate takeover in 2001, I think it was. No, sorry, it was actually 2000. The deal completed just before the tech bubble burst in March 2000. So I think the figure in the end was $350 billion, which was until about 4 or 5 years ago, the biggest corporate transaction ever. So, Vodafone was good to me along the way. And the guys in Dublin, Bank of Ireland, had a lot of money in Vodafone and management and made a lot of money in that period trading telecom shares. So to answer your question, I think I'm still on the same track here. There was just so much going on. I was in the right place at the right time. The revenues were going up. You just had to stay on top of it. And actually, the more you were doing, the better, because you hadn't any time to worry or think about any particular trade because you were just flat out doing it all. Does that make sense?
That definitely makes sense. It's just such an interesting time, it seems to be. And then you've got this kind of almost like it's an unfair advantage with the stuff coming from Ireland that the London guys wouldn't know much about. You've got your kind of ins there. But I think in the book, you speak as well about the gambling side of things, the horses, the poker, the spread betting, which spread betting was kind of like popular when I was in Davy, and we would do, all the young guys would be doing that on IG Exchange. Yeah. But at the time, the margin that you needed, for those people who are listening that don't know, like that type of game, you have to have a certain amount of buffer in your account to make these bets on. Basically, spread betting is betting on if something's going to go up and down, and it's by point. So if the FTSE goes up 10 points and you have £1 a point, you win 10 points. If it goes down, you lose 10. But when we were doing it on IG, the margin that you needed was really small. So we could, now it's really, so you have to have a good few pound to actually get involved, which is probably for the best, because I didn't do well, Mark. I remember for those people from Dublin, I met Mark Baker when I was about 24 in Casey Peaches for lunch. And I told him I was going to be a millionaire based on this, because I had a good run with IG, and I'm like, this is easy, So, Mark didn't believe me then, but it didn't work out in the end. But anyway, so when it comes to that, was that a big part?
I've got a story on spread betting. Let me tell you, actually.
Yeah, cover it.
So I was in a pub in London, and I was having a few drinks, and we were having a chat. It was Europa 96, whatever it was. Italia 90, remember that was World Cup, right? So Europa 96. So I bet high and bet low on yellow cards with some guy. This is basically spread betting, right? So the guy said, the betting is 225 yellow cards, whatever the hell it was. I think that was a number. And I said, oh, there'll be more than that, and of course he went high, and I went high and he went low, and he owed me a couple of £100 when it was all over. So when it came 2 years later for the World Cup, I was sort of thinking about this, and I'm sitting reading, there's this great article in the Daily Telegraph on a Saturday. It was written by a guy called Angus Loughran, I think his name was. He was a friend of Alex Ferguson, but he used to make these tips, and the column was called For the Better. It's a good little play on words. And so anyway, it was about this day, about red cards in the 98 World Cup. And so he said that the last World Cup, now there were more teams from versus 94, and there were more games therefore there were going to be an increase in red cards. But there was also a new edict from the referees about sliding tackles and tackles from behind, immediate red cards. So the number had got, the previous outcome had been 26 or something like that, red cards in the previous World Cup. But this time they were making it 53. So 51-3, there's your spread, quite a lot, right? 2 points on 50, 4%. So anyway, I said, okay, I'll go short. So I picked up the phone Saturday morning. I'll go short £500 a point, right? So £500, okay, fine, put it down. World Cup started, no red cards. So every single day I put another 500 quid.
So every time, so just for the listeners, but you're saying that there's going to be less than what the bookies think.
Betting down, right?
Yeah. So every point under 51, you're betting that 500. So say if it's 45, you win whatever six times. Yeah. Okay, cool.
The paramount is a spread to buy back. So if you sell it, you got to buy it back. If you buy it, you got to sell it. So one way or another, you have to cash out at the end of the spread period. So in other words, at the end of the tournament, or if you want to close out. So if you close out at the end of the tournament, you're out at the spot price, whatever the final number is. If you close out before the end, you're out with a loss on the spread as well, no matter what way you go. So had I gone short at 51, which I did, and let's say there had been a red card or two, and then it would have gone up. So the spread would have gone up to say 55.7, which case I would have lost 6. Even though maybe there's only two red cards, do you understand? So anyway, I was betting it down, and I had 9 of these 500 quid. So I had 4,500 a point. You know, it was quite a lot of points, red pounds. So one day I think it was 2 Colombians got sent off, and it wasn't great. So I'm sitting in the office and thinking, oh God, there goes 9 grand, you know, and the spread would have gone against me as well. Moved it quite significantly, a lot more than 2. And then that evening, I'm at home, you know, my missus and all the rest, and slip into the front room to watch the match. And no interest whatsoever in the match. It was Scotland and somebody, and Craig Birdie got sent off. And we're going, oh my God, you know. On the day, you know, it was 13.5 grand down. I'm thinking, oh, for God's sake, you know, and the spread went against me. I may have been 30 grand down, you know, it may add another 2 points on top. And so anyway, I had this fit of shingles, you know, that moment when, oh my God, my body convulsed when he got sent off. And also I was really disappointed in the final as well. The thing about betting on sports, it ruins your interest in sport. So in the World Cup final, France won. My only interest was that they wouldn't have somebody sent off. And of course, Marcel Desailly got sent off in the final, cost me 4.5 grand. So anyway, the final outcome on the thing was it made up at 22, and my short was 27. So I made 5 times 4.5 grand, so 22 grand in the end. But it wasn't worth the ups and downs, you know. It was huge pressure, far more pressure from that than going in and doing the job, you know, because you're thinking about it all the time. Plus the games are being played all day long, you know, 10 in the morning to 12 in the day to 9 at night, and you're watching these things. It's just, and all the time you're doing your job. But no, I don't recommend spread betting to anyone. I don't recommend gambling to anyone as it happens. It just completely destroys your love for sport. And, you know, you generally will lose, but I'm just giving you a couple of winning examples. You know, there are a whole lot of losing ones as well. I lost a lot of money in spread betting on the election of 1997. Tony Blair, you know, they had a huge landslide win, and I predicted he would have a landslide win, but I didn't predict the scale of it. So I was short about 150 point gain for Labour over the Tories, and it came out at 250. It cost me 50 grand, 100 points.
I just,
Chris, sorry, go ahead.
The spread of betting, as it not the spread betting, but like the spread of the things that you had bet on over the years. It seems like it's from horses to politics to Marcel Desailly getting sent off for £4,000. It's like it's an interesting way to live. What do you say, Mark?
Just on the betting side, Chris, you mentioned, well, previously you mentioned being in the right place at the right time a lot of the time. In the book, there was one time one main thing that kind of stuck out to me about maybe not being in the right place at the right time, to do with a meeting that you didn't attend, and an opportunity. Not to remind you of it, but it was.
I've forgotten that. Oh, you take a drink of tea to settle myself for that one. Betfair. I would have been all over it. I didn't attend the meeting. It wasn't held at Merrill Lynch. It was held at Warburg, which was subsequently consumed by UBS. So, and one of the PAs to one of the bosses came to me, you know, I didn't know her well, but she came to me and said, I know you're big into the betting, and would you come to this meeting? And I'm sort of shrugging the shoulders, you know. We're doing meetings all the time, you know. I mean, like, we've got 2 or 3 meetings a day, you know, going on, and just another meeting somewhere else in another place, you know. And it turned out to be Betfair, and they floated at 1.4 billion. So the answer to that is a 1% stake would have been worth 14 million. But more than that, I was in their league, right? They would have jumped all over me, and I would have jumped all over them. They would have said, "Oh my God, it's a bit like getting the job at Ulster Bank." You know, when I got that job, they were saying, "You're trading stocks and shares, really?" Nobody was doing it then. You know, there was no 24/7 business programs or anything like that. You know, and I got the job just on day one. I was offered a job with Irish Life at the same time. So anyway, I would have been all over that, and I would have been certainly a big investor, if not an executive of the firm, and I would have had a very different outcome. That's the true story. Yeah.
And just to go back to I'm always interested in people who are kind of high performers compared to the average, like somebody who is good at, say, what you do compared to someone who is excellent. What do you think are the key kind of skill sets or talents that you had that kind of separated you from the average performer or the good performer?
I think one guy offered me a job, a guy called Terry Smith, and this was another miss for me, by the way. He offered me 1% of his company, and his company was Colin Stewart. And I knew the previous boss, Andy Stewart, whose name was on the firm, but Terry Smith offered me 1% of the firm. And I just left Merrill Lynch, and I thought, look, I've just taken, after 11 years, I've just got away from the coal face. You know, the heat in there is feels like a job at the coal face. So I said, I just need a couple of months to get out of this. Plus I've got a whole lot of options and stock, which I'm not allowed to take another job for a period of time, and I'll come back. So I went back X months later, and he said, forget it. I don't offer 1% of my company to just anyone. That's in the book, right? So I missed $5 million in that. But anyway, Terry Smith had a set of rules, which, to answer your question. So he was looking for people with various characteristics that included divorced parents, death of a parent, death of a sibling, you know, lots of very harsh real life experiences. I said at the time I ticked every box, you know, I had them all, you know. So there is some element of that, I'm sure, for me at least. It doesn't apply to everybody, but I think you have to be really, really hungry first and foremost, you know. And I don't know what gives a person that, you know. Not everyone's been through my experience, very few have, so it's not true for everyone, but that's my own experience. The second thing, unfortunately, you just have to have this sort of buzz, you know. You can't pick it up off the street, you know. I'm the only one in my family that has this sort of approach, you know. It's not for everyone, and I don't know whether that comes from starting betting at sort of pre-teenager and live my whole life around gambling and betting, or whether it's just in my character, testosterone, whatever it might be. I don't know, but the one thing I do know, you know, you have to have a single-minded attitude as well. I'm Chris McGale, you know, and part of that, as I've explained earlier, was my defensive mechanism, you know, stay away from me because I'm not a good guy to fall out with, sort of thing, you know. But to answer the question, is there are many, many factors, but hunger is very, very high up the list.
Yeah, I think people think they're driven by money, but when they're really actually driven by competition. Or would you say you were very competitive? I know you were a competitive boxer when you were younger as well, right?
I was county champion, yeah. I fought Barry McGuigan's sparring partner. That's my claim to fame. I got absolutely hammered. I never boxed again, but I was county champion twice, yeah.
Okay.
The competitive thing is Mark is really, he's a competitive guy. I've often said to Mark that I'm not competitive, but then Mark lists a whole thing of, because Mark's known me for almost 20 years now, so he lists off a lot of very competitive situations that I've put myself in. But it is something to maybe teach your kids about as well. Like, then you said, like, hey, you can't really. It's you kind of have that drive or you don't, or you have to have that single mindedness.
I have two daughters, Chris, and one of them is just not competitive at all. She just wants everybody to be happy. She's creative, and the other is, you know, gets angry if so angry she'll throw the Monopoly board up in the air if she loses.
It's the way it goes. It's an interesting one. So in the book as well, it sums up with you kind of stepping aside from Merrill Lynch in the early 2000s. What kind of drove you to that? Because you're still, I guess, you're probably in the prime of your career at that stage.
Yeah, I mean, I made a lot of mistakes. Let me tell you, giving up $1 million a year job is a huge mistake. Not taking the Colin Stewart job, even with the risks around my settlement agreement with Merrill. I retired in inverted commas, went on sabbatical and never went back. So I called it my George Best moment, but walking out in $1 million a year job is not smart. The Colin Stewart thing, the right thing to do was to wait because I was under contract, and I did that and sort of backfired on me. Not taking the money in the court case was a bad decision. So when I reflect on those backwards, one of the things that maybe made me a success is also has been a liability for me, which is my sort of single-mindedness. Doesn't always think rationally in all of those instances. Had somebody been sitting beside me in the court case and said, "Listen, mate, you're going to take the money," I probably would have done, but no one was there, and I was on my own, and I didn't take it. And I guess I'd gone so far above everybody I knew by the time I was being offered money by Colin Stewart or anybody else. There was nobody to confide in. What shall I do here? I was up there in the deep in the blue sky on my own. And so I made bad decisions, and they were bad decisions. But having said that, when I left Merrill Lynch, I was really ready to go. I was burned out, and burned out in the sense of working all the day, and gambling at the weekends as well. So to compound the whole sort of pressure cooker effect, I was earning $1 million a year and gambling $1 million a year. Now, I wasn't losing, to be clear on this, I wasn't losing $1 million a year, but actually I did stop gambling completely when I started to lose. Because why did I start to lose? Because I lost my focus. So because I had so much money, I threw $5 grand on this, 10 grand on that. Who cares? And then when you do that, you wake up one day, as I said in the book, in the early part of the book, you wake up in the middle of the night before your 5:30 alarm clock, and you go, shit, did I lose 15 grand last night?
Not a good headspace to wake up into. And Chris,
it's not the money itself, but the whole sort of hurt. Oh God, this is everything you're not supposed to do, right? And
I always
slip into the bookies because they're open this summer's racing. 15 grand, 5 grand chips. It's like going to the casino, which I never did in my life. Never play machines, never do casinos. Everything I've ever done is strategic, thought about. It's supposed to be that way. And the moment you lose that discipline, just stop, which is what I did.
And what do you do when you do step aside from Merrill Lynch in your I guess timeline, probably early 40s at that stage?
39, retired at 39. So
and you've been like retired since then, as in even doing a few bits, but officially retired?
I had a few $1 million of stock in Merrill Lynch, and I had a lot of personal property assets. So I owned a very fine house in London. My neighbors, great and the good of the BBC, and that sort of Chiswick near the BBC, and actors and so on and so on. And then I had a villa in Portugal. I had assets in Omaha. I had a pub which I'd been offered a couple of million for. Subsequently, I wasn't then, I had a couple of million, but I was investing in the pub with a plan to sell it. That was the idea, and I put $500,000, 650 grand into it over a 2-year period. I had an offer of $2 million in 2007, failed to make it happen, and sold it for 1.44 million less, 570 grand, 12 years later. So anyway, to go back to your question, I thought, I've been gambling all my life. I'm a money man, right? So when I was a kid, I was running a rock band. When I was 15, a guy in the pub called me Ireland's youngest impresario. I was running a band called Casper, and getting guys like Rob Strong, Andrew Strongstad to play in gigs, and then putting my guys on as support, and then making a bit of money and putting it into the band. So all my life I'd always made money. It just sort of came easy. In fact, still answering the question, by the way, one of my problems was it all came too easy. Everything, Merrill Lynch was a stroke of pure good luck, right place, right time. Getting into Queens, going back to school, everything was a stroke of luck. And then I made it happen along the way. And I sort of felt quite infallible, I suppose. And of course, that is actually hubris, great word. And so things did go wrong. When you leave Merrill Lynch, when you leave Man United, you don't go back, right? Number one, you drop down the leagues. You go to Nottingham Forest, and the pay goes down, and the opportunities go down, and clients go down, and and it's like an aging striker. So I had all of that experience, which was not very nice, and kept hanging in there for many years, and then I got absolutely hammered in the financial crisis. So and lost a huge amount of money, including all my options in Merrill Lynch. And
you mentioned that in the book as well, because the Merrill Lynch got bailed out by Bank of America, and then so all your options and stuff would just be.
Well, the options were priced at sort of $60, $70, $80, and the thing was taken over at 30.
Okay, so just was way below.
Gone, zero.
Jeez. Okay.
It was quite a journey, that one. So in many ways, where I am today, and writing the book as well, it's been a lot of reflection, so my greatest strength was my greatest weakness. I didn't quite say the words earlier. The expectation of always winning, in horses, because I knew everything about horses. I could pick a race, I'd look at a spreadsheet of races and say, out of the corner of my eye, that's the race to concentrate on. There's only 5 runners, small field, the ground conditions. I'd select 2 horses. I'd pick between the 2 of them, and that's it. And that was a very good formula. And playing poker, I was fearless, basically. Whatever, if you, it's in the book again, if you face me down, you're either going to win big or lose your lot, simple as that. And people knew that, and I had a good power in the game. And in the markets, I just generally had better judgment, and I had more going on. So I just let everything go my way. And then it all went wrong, and it's all in the book as well. So hubris and this thing of infallibility, where you think, I lose today, it doesn't matter, I'll win tomorrow. That's not the case in life, as I learned.
It's such an interesting story, and I know we're just over the time. A lot of that we talked about, so I want to be respectful of your time. But I think we started this podcast with talking about the inspiration part of the kind of journey. And I think that there's probably, I was thinking about this, Mark, when I was reading the book. There's probably a lot of people that are from kind of like maybe not the big smokes around Ireland, like Omaha or whatever, and they can say, okay, I'm coming from here. I don't really, don't have parents backing me here or whatever, and they can still go have these really exciting careers where they end up having enough money to gamble $4.5 grand on a red card here and there. And so I think that if you want to have a read about that, definitely the book is for you. I love that it's already on audiobook straight away. I think that's a great move. These days, people, everyone's still on lockdown here, and we're basically reading while we're walking around our little 5K here in the south. But so we wish you all the best of luck with the book, and we're going to be blasting it out on our social media and everything like that to our guys listening. We do have one final question for you this evening. Would you prefer a mug or a SharkPod t-shirt?
Oh, SharkPod for sure, yeah.
Yeah.
Actually, can I have both, guys? Can I have both?
Yeah.
Come on.
You're the second person to ask for both, and we're gonna make that happen. So after the show, Mark will be reaching out to get some details.
Can I just say one final thing before you wrap up?
Yeah.
This story, and you pick up in your summary, Luke. This story is about the journey from John Street to Wall Street. That's the beauty of the story. You can do it. Anyone can do it. Mark, you're in the business of finding people that might do that, and it can be done. So everyone, you can do it. Work hard, have ambition. If you don't have ambition, you've got no chance, number one. And secondly, it's not for everyone, but if you do have the attitude and you do want to do it, you can do it. Absolutely.
And on that, I just one thing to add before we wrap up is that we were talking about this before on the SharkPod. You want to make sure that you're living a life that you might want to read about one day. If it's a bit mundane and you can feel that, if you're like, I wouldn't read about this, I think that's something to maybe reflect on. But at the $1 Million Irishman, like I said, it's available everywhere, Amazon, Audible, all that type of stuff. If you want to go to our Audible link and sign up, and you can get it for free for your first month, we'll put that link in there from the SharkPod as well. But Chris, thank you very much for your time tonight, and I wish you all the best of luck with the book.
Thanks, Chris.
It's with Easton's Book Station and Kenny's as well. Thank you,
Perfect.
guys. It's been a total pleasure. I've so loved this. It's new for me, all this stuff, by the way. Tonight. Thanks so much.
You're a natural. All right.
I love it.
Chris.
Good stuff. Thank
Bye.
you.
Bye.
Bye-bye.